Thanks, SOSV. I'm here today with Gene Berdichevsky, who's CEO of Sila Nanotechnologies. Gene and I have known each other for a really long time, and he's a terrific observer of his own part of the industry and the industry at large, including batteries and EV. So I'm really looking forward to this conversation. Gene, why don't we start with your business? Silicon is distinct from the rest of the next gen space in the sense that it's here, and so I wonder if you could talk about that. What are you expecting in terms of the competition, and can the West hold its own in this part of the industry versus the competition from China and from Asia generally?
Thanks, Steve. And good to talk to you again, as always. Look, I'd start by saying your observation's correct. Silicon is here. And what that means is the category shift is underway from graphite-based anodes to silicon-based anodes. That category shift will take probably 10 plus years. And there will be, more than one or two winners in that category shift. But I think 10, 15 years from now, silicon will largely have replaced graphite as the dominant anode material. And if we look at kind of the composition of batteries, 10 or 15 years from now, it'll be silicon dominant with a little bit of graphite sprinkled in. We see that kind of every day with our customers. We work with partners to replace today 60 to 80% of the graphite in a battery, which is very distinct from kind of what's happened with silicon over the last 10 years, where it's replaced 3 or 5% of the graphite in a battery. So, in general, the category shift is happening, and it's happening both here in the West. It's happening in China. There are companies that are being built. We developed technology. We invented this sort of dominant technology in silicon materials. There's different types of silicon materials you can use, but the ones that can replace most or all of the graphite are a class of materials called nanocomposites that we hold almost 200 patents around. To your question of can the West compete? Of course it can. We know how to manufacture things in the West. We haven't done it for a while. And the place to do that, the place to compete is on tomorrow's technology playing field, where everybody's starting the race from the same place. In battery cell production, where you're talking about China, Korea, Japan having had a 33-year head start now, I think it's going to be much, much more challenging. And we see that, with some of the challenges, for example, in Northvolt would have, or others. So, but in a new technology like silicon, we can and we will compete.
So, as you're talking, I'm thinking of a couple of things. Why is this important? Why do we care about this? One is that silicon gives you fast charge, and more energy density, so more driving range. But and you can talk about that. But geopolitically, I'm thinking of how cobalt got driven largely out of the battery. That's taken the edge off of our focus on the DRC.
Mm-hmm.
Graphite is one of China's greatest in the areas where it's really dominant. Graphite is one of the ones where it's extraordinarily dominant. And over this period, you take away that one segment of dominance and replace it with another. But we need to scale up fast, right? Or China just replaces its dominance of one with this one.
That's right. I mean, we have to scale up sensibly, I think is what's really important. We have to scale up economically. We have to have a cost structure on these technologies that, is able to have long-term sustainable margins, and that means developing technology to bring the cost down. You're right. Graphite is about 92% either mined, refined, or processed in China today. It's the highest concentration of any component in the lithium-ion battery. And honestly, as a result of that, even under the IRA, there are exemptions for graphite to not be included under the FIAC rules until 2026, when there are at least some kind of alternatives. and silicon does stand to be that alternative, and we have to scale fast, but we have to scale sensibly.
Yeah, I'm slightly worried about this word sensible because does China scale up sensibly?
I mean, look, economics is like gravity at some point. If you don't make money, you go out of business. I think we are seeing, we will see over the coming years how long you can sort of defy gravity. In China, there are two electric car companies that make money, and that's Tesla and BYD. And so, what happens to the other 100? Um, there that story can only repeat so many times before investors ultimately, there are still investors in these companies in China or in the West. And so you really do have to think through kind of the right path to getting to a sustainable business.
Yeah. So let's move on to how the U.S. How the government has sought to put the U.S. on the playing field. Most recently, we have a new round of DOE grants, $3 billion. 25 companies focused in that midstream, the processing midstream, a little bit of silicon, not much, but nickel, manganese, lithium. We've got electrolyte in there. We've got a focus on big companies this time versus the most of them were in smaller ones, and we also have right after that one day the grants, and then the next day the U.S. announced a proposed rule to effectively ban Chinese EVs in the United States by banning Chinese connected vehicles. I'm wondering how do you view how should we think about how the U.S. is carrying out this policy?
I think so. I'll speak to the battery midstream processing, and I like the term you use, midstream. I think we get so hyper focused on the end product sometimes, whether it's the battery cell or the battery EV, and we say, well, if we just build battery factories here, everything will be fine. But if all of the input materials come from other countries, we're still dependent. And so we say, okay, we'll go one step upstream. We'll make the anodes and the cathodes here, and that's exactly what sort of the first round of the MESC grants from the DOE supported. Sila. We were fortunate to receive $100 million grant in that, and grateful to the DOE for the support. But again, you sort of say, okay, great, you make those components. Where do the inputs to those come from? And you can keep asking this question until you get to the raw commodities you mine out of the ground. So I think this is a fairly rational sort of position to support next the midstream. You have to also ultimately consider the upstream of the where are the raw materials coming from. So I think in many ways that makes a lot of sense. You need very efficient processing of these chemicals, and if you don't have it, you're not going to be able to make the cathodes and the anodes. And then even if you make batteries here, it won't really matter from a national security and energy security standpoint. So I think that's relatively rational. I think on the connected components for EVs, you know, I know less about that. I look less at sort of that seems to be coming from more of a national security angle, less of an energy policy angle. I mean, we were already imposing tariffs of I think 100% on Chinese EVs under the 301 tariffs that the Biden administration announced some months back. So I'm not sure that this actually plays into kind of a. I don't think this latest bit about connected vehicles has much to do with shoring up the EV supply chain.
Yeah. A couple things I'm wondering about when I thought about those two moves. I thought about tit for tat retaliation. We have seen this. There was there's a trade restriction on graphite, and there's a bar on gallium. It's harder to import that. And also, when the IRA was announced some of the components, like say LiPF6, the electrolyte salt, the price, Chinese companies dropped the price by 80% at that time, making it very, very hard for the U.S. makers of that salt to expand, which they had planned. And so I'm wondering about the reverberations of these moves. That's one thing. Could we see tit for tat reduction of Chinese prices, making it difficult for these companies? And second, um, uh, in terms of the ban on connected vehicles, uh, uh, the sales of Tesla in China and VW and GM and Ford and everyone else have dropped. Tesla has hoped.
Plummeted.
Yeah, yeah. So that's a better word. Uh, Tesla has hoped to revive its sales by implementing FSD
Mhm.
in China. I'm wondering if we get a tit for tat, whether you get China retaliating by barring FSD.
I mean, that's your guess is as good as mine, but I would say almost certainly. And and to be clear, it's the sales of foreign makers combustion cars that are plummeting in China, right? In part because you're sort of seeing the electrification transition now, where over 60% of new vehicles sold in China are EVs, and almost all of those are domestic, right? Tesla's sales are, I think, flat, but the market share is now half what it used to be just a couple of years ago, because there's so many new entrants and they're so hyper competitive. So I do think you're going to see some back and forth on this. Now, look, we work closely with Asian battery makers in Korea, in Japan, in China as well. They are building factories outside of China that need Western supply chains. And so, in our view, from a next generation technology view, it's not as simple as just China against the West. If the battery factories are going up in the US or in Europe, and they need Western supply because that's what their customers are demanding, we want to be there to support it. Ultimately, I think that's kind of good for everybody. So I think, again, the key, I think, has to be, the focus has to be, can we build the full supply chain in the US or in North America? Can we build the full supply chain on the European continent? That's why sort of those midstream grants are so important. It's supporting the build out of that. Who builds it? I think matters to a degree, but from a security of supply, from an energy security standpoint, step one is get the factories built, and sort of go from there, right? I think what we really don't want is all of the production of all of the batteries and the upstream materials to all be in China, all of the jobs associated with that to be in China, and then the day that something goes wrong, we suddenly can't get supply. But if you have, whether it's a Korean company in the U.S. or a Japanese company in the U.S., it doesn't have to be American companies. It doesn't have to be Western companies. What you want is the supply chain to be localized, and I think that's what governments can and should focus on, and I think in large respect do. But you're right. There will certainly be some kind of retaliation, and we'll see what happens.
Gene, you raise a very good question that I wonder is going to whether it's going to end up in U.S. policy at some point, and the degree to which it will, and that's recognizing that Chinese companies do dominate the market. They make almost all of a number of big parts, like LFP, like graphite.
Graphite separators, a few other components are really dominated. That's right.
Yeah, and so if we want our car makers to compete, don't we have to allow some of those companies into the U.S. market?
I think we have to really consider it, right? I think and you see this, I think it's sort of rumors that um, uh, GM might be working with CATL and TDK, which is a Japanese conglomerate, to build a factory here. Ford obviously continuing forward with building, partnering with CATL. And some months back, we had Tesla partnering with CATL to bring some of their equipment over here for a factory that Tesla would operate. So I think we're seeing that, and I think we have to thoughtfully consider those cases. There's not a sort of one size fits all, yes or no. But I think what you want is, are those factories here and those jobs here? And then are those supply chains here? And I think what we've done sometimes is we've said, well, we just want electric vehicles. Doesn't matter what supply chain is. Well, okay, and then we just want batteries to be built here. Doesn't matter what supply chain is. I think this notion of, if your whole supply chain is based in North America, then you get the benefits of the IRA. That's the notion we should be moving to, and that will drive the best companies to compete on a level playing field in the U.S. And if they're a Chinese company that's doing great and they can build a factory more economically here in the U.S., or if it's Sila that can build a plant more economically in the U.S., let's compete. That's the nature of how we should operate. And ultimately, the American people, the American job holders win in that situation. So it's when you start sort of selecting only the end component and saying, well, as long as we get the cars, no problem. Like, that's when you start to have these issues.
Yeah. No, super interesting. Let's talk about fundraising.
Sure.
So a key part of getting the supply chain built up and getting is in investment. This is huge in investment. You just gone through uh, a big fundraise. It's hard now, right? And I'm wondering, has the though the kind of investors who were investing in batteries, have they moved on to something else? How should we think about that? What's it going to take, to get that money to move back?
There are definitely some investors that kind of came and went, but I would say that that's been kind of the minority of investors. More of what's really happening, Steve, is that in the private markets in particular, and at the growth stage in particular, which is where a lot of these companies are that need, 9-figure sums of capital. There's just been a freeze on the movement of money, and you can sort of trace it back to the fact that there's no M&A and there's no IPOs. There's no IPOs because the market's tough right now in the public market, um, but there's no M&A, in either, and so most of these investors that have committed to funds, right, the limited partners that commit billions of dollars to these funds, aren't getting any of their money back out. So they bought a lot of assets. Nothing's returning capital, and so there's no capital to reinvest. So that's making it very difficult. Obviously, the sort of sentiment on electrification is also making it difficult, and interest rates and all the rest are also making it difficult. But I think while everybody kind of understands the sentiment bit, and frankly, most of the investors that have been here before the sort of last couple of years and are still going to be here a few years down the road, you know, they see the sentiment as a periodic thing, right? We had a lot of hype a couple of years ago, and we have a trough. And you and I are both uh, spent enough time in this industry to remember when this happened in the early 2010s, right? We had sort of, I mean, I remember reports from the big banks saying, 30% EV penetration by 2015, and I was like, physically not possible. So this is the second go around. The car makers know that the future is all electric. Many investors know the future is all electric. But the thing that hasn't been talked about is the sort of the freezing of the markets. That there's no M&A. That there's even mediocre kind of M&A unlocks capital to then invest in the future winners, and none of that is happening.
Okay, let's talk about, we've got just a few minutes left. I wanted to talk about Tesla because it was the driver of everything we're looking at, right? I mean, China happened because of Tesla, and
Mhm.
I'm wondering if you're worried. We didn't say you started out in Tesla. Um, you're there at the very beginning. Employee number 7, is that correct? Yeah.
Mhm.
So you've got that in your DNA. Um, are you worried about where Tesla is, where it's going? Is it still driving the market?
I think um, the mission in the early days was always to spur the world to go all electric, right? That was the goal. And I sort of left in 2008, and Elon since then has built Tesla into a monster of a company that was going to go and eat everybody's lunch in the automotive space when it came to the transition, right? And for many legacy automakers, at first it was a curiosity. At later it was sort of, okay, they'll it's a thing, and eventually became, oh my goodness, if we don't move, we might be out of business. And so that fear drove a lot of change in the industry and the legacy OEMs. And I think that with Tesla shifting its focus more towards autonomy and less towards electrification, I think that fear has also now shifted, but it hasn't gone away. It's just shifted to being, well, China's going to eat everybody's lunch if these car makers don't figure out how to electrify. Chinese EVs are very high quality, and the sentiment in China is, when it comes to combustion cars, you want to buy a Western brand. But when it comes to an electric car, you want to buy a Chinese brand because they're ahead. And so I think that that should be the thing that keeps folks up at night. Where it used to be Elon, it's now China if you're a legacy OEM. And yes, there's all the sort of subsidies, and you can think about tariffs and trade wars, but fundamentally, as they figure out how to make a product that's just better, it's going to be harder and harder, no matter what kind of protections you have in place to compete. And so, if you're a legacy OEM, you have to be thinking, how do I make the best damn EVs in the world? Full stop.
Thanks so much, Gene, for spending this time with us. Super interesting conversation. Um, uh,
Thanks.
yeah,
Pleasure.
and thanks, SOSV. Back to you.